The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everybody, and welcome to today's Beginner Circle webinar. I'm Zach Manis, and I will be your host this evening. Let's go ahead and get started. Jonathan, I asked you to clarify your question a little bit more because I'm not sure exactly what you're asking as far as overlap. And Claude, I'm not sure what your question there is, but we'll go ahead and get started, and feel free to ask questions. The purpose of this webinar, guys, is especially for new people that are just getting acclimated to Elliott Wave and using the site to get some questions answered, make sure they're reading charts correctly, get their bearings in terms of bigger picture as far as where we are in things that are normally covered in the market section. And as we answer some of those questions that pertain to the Elliott Wave nuance and overall counts in general, we kind of go through some of those main things that we do cover in the markets, and we'll go ahead and start with the S&P. So looking at this as the SPX.XO, that is my cash index. I look at two instruments to look at the S&P 500. That's the SPX cash, and that's also the ES mini futures, the continuous contract, which are the primary futures contract for the S&P cash. So we're still looking at a larger primary degree wave 5. This is in bigger structure off of the 2009 low. The primary wave 3 top was back here in 2018. Most things count best as a wider expanded flat for this fourth wave, where the highs that we struck in 2020 are a B wave or X wave high. Although sometimes I have counted that as an extension of the primary wave 3. Some indexes that actually does count better. It really does not change much overall. Either we're looking at a 200% extension of the primary wave 3, so we can easily be getting past the 2618, 276 extension, close to 300% extension for the primary wave 3, or if we have a much higher high as the B wave, then it further gives us confidence that a more extended count for the primary wave 5 is still the correct way of viewing things. We will get into the Nasdaq in a minute, but for the moment, when we're looking at the S&P, and I might go ahead and show you guys a few of the other sectors that Garrett and I are looking at in stock waves, but the S&P still counts best as this initial 5 waves up off the March 2020 low for wave 1 into the June high, a quick little consolidation, and I'm going to go ahead and move my wave 2 low to the actual low in June instead of counting that running flat. That we were talking about, we've talked about months and months ago, that I liked the running flat into July low for the intermediate degree wave 2, because that really counted best in RSP in the NYSE. But it looks a little bit awkward on the S&P, so we'll go ahead and back and change that to the lower low. That gives us a top here at the 123.6% extension off of that wave 2 low, the parenthesis 2. So we know that Fibonacci Pinball wants our wave 1 to stop either stop at the 382 or the 50. And if it does stop at the 382 or the 50 for the subwave 1 inside of a third, then our third of the third usually goes to the 100%, and then the fifth of the third usually goes to the 1382. We know that when we have a larger wave 1 that gets past the 50 and closer to this 1618, shouldn't quite get all the way up there on this wave 1, but that our third is going to tend to try and get closer to the 1236 extension, which we did here. And then we got a corrective retrace. We really had enough for all of a retrace into the February low. We started to look really strong off of that low with a 1, 2, and 3 waves up. But for this to be the start of the 5th wave, we needed to hold a 4th wave consolidation in early April, and then get a 5th wave higher, and then hold a wave 2 as this wave 1 and wave 2 here. When we couldn't hold a 4th and get a 5th wave up higher, it left only 3 waves up. So there did allow potential for this to be ABC up as wave 1 of an ending diagonal, since many charts did count best as the fourth wave being complete into the February 24 or the March 8th lows, depending on whether it was tech names or the S&P in general. But when we couldn't hold the higher consolidation in the 4350s, that started to break down and drop under reliable support. And that went on to fill out as a larger C wave down to the next fib level at the 50% retrace of this third, and potentially now counting as 1 degree larger. I still am going to count this as the minor degree wave 4 inside the parentheses 3, and then look for another 4 and a 5 to hold. But I think the way that we treat 5 waves up into the next high, even if we thought that we were going to hold as that intermediate parentheses wave 4, it's still a large enough magnitude move. That would be a fourth wave larger in magnitude than this. I mean, either it's a fourth wave larger in magnitude than this, or it is all of the primary degree wave 5 top into that major topping zone. So you can't rely from here and say, I'm going to stay pedal to the metal long and just hedge a little bit for a 30% drop that might not actually hold as that fourth wave, that could end up being all of that primary degree wave 5 top. So it does mean that as we start to fill out and get most of this move complete, that you're starting to trim down your position sizing and button up your stops and be much more careful heading into those new highs. John O says, what is your make or break low for SPX if we head lower towards 4? What's too deep to continue the bull market? So I think what happens is if the low, and we'll start looking at the microstructure that we're trying to track inside this wave 1 in just a minute. But I think if we're not going to hold here as the minor degree wave 4, I think any lower low really needs to shift to the parentheses wave 4 already. And that, I think, counts best where this is an A, B, and a C wave up for wave 1, an A, B, and a C wave up for the parentheses wave 3, and a deeper fourth, which really does allow even down towards the 3400 region before it starts to run into some serious issues. I think the Nasdaq, though, if it's not going to hold here as the parentheses wave 4, it's already that 1 degree ahead, which we've been talking about. It can count as all of primary wave 5 already complete. But at the end of the day, even if we're going to say in some things, like there's a few sectors that Garrett and I do think that primary wave 5 is completed, most things do count as a corrective move down from the highs and due for at least a bounce back up into the tangle of moving averages that should be the first level of resistance. So whether that is starting, that bounce is starting, or some things try and make lower lows to really make that more official, that's the only thing that we could be looking for, we'll have to follow the microstructure off of those lows. But most things should still be getting a bounce up into the equivalent of the 4400 region, even if that is just a corrective bounce. Jonathan says, any issue if perhaps wave 1 of 3 topped at 39.99? Jonathan, are you talking about I think you're talking about a much smaller degree. So let's jump down by degree, and we'll go first to a 2-hour chart. Here on, actually, I'll go. Let's see. No, we'll go ahead and go here. I'll just hide all this stuff. All right, so on a 2-hour chart, before we zoom in too much, we want to see our fifth wave of 3, as we discussed on the other larger degree daily chart for the sentiment stages. Our 3 of parentheses 3 got to a 1236 fib extension. We held a 618 deeper than ideal, but we really should get close to 5624, which is the 1618 extension for 5 of parentheses wave 3. So if that's our target for the minor degree fifth wave, that minor degree fifth wave should be 5 waves. And if we're going to be 5 waves, the normal proportions, actually normal, let me disconnect this from the wave 1, our most normal proportions would look a little bit more like this. So to get a 1382 extension for our third, get a wave 1 where we have a wave 2 that pulls back into our normal fib zone of the 382 to 50% to 618 retrace, and then the 1382 extension for the third, normal support for a fourth, and then a fifth wave up of normal proportions into that 5624 target, then that means that our wave 1 should ideally target right around 4500. That is the ideal size for wave 1 of 5, that circle wave 1 of 5. So now when we start zooming in at the smaller degree, we have to say, all right, what do we have off the low? Or first, all right, if we want our wave 1 to target 4500, then we want a wave 1, 2, 3, 4, 5 wave structure inside that. I'm going to disconnect this from that wave 1 so that, again, we can look for that ideal proportions that we want to see inside that subwave count. So that would be the ideal proportions inside that circle wave 1 would take us up to that 4500 region. That would give us a wave 1 of the circle wave 1, ideally targeting 4115, 4120s would be ideal. And then pulling back to the 3990s to 3924 for that ideal fib zone, then heading up to 4400, pulling back to the 4250 region, and then up towards 4500 to 4550 as the fifth of that wave 1. So now we zoom in and take a look at the actual waves that we have off the low and see where those line up. So in the S&P, we have this initial move off the low that can count as 5 waves up. We have a sharp corrective retrace. Didn't look as sharp in the ES futures, but it came right to a 618 fib retrace, which is our ideal fib zone. We can project off of that. We have a possible 5 waves up as a leading diagonal, close to a 618 extension. So that implies that our third, because the microwave 1 of 3 got to the 0.618 fib, that our third, our micro third of the 3, should get close to 4090, which is the 123.6% fib extension. And then the fifth, the micro 5 of 3, should get to that 161.8 fib extension. Then we want to hold 4090 to 4050 as our fourth. And then a fifth wave up is going to be taking us closer to the 4200 region based on this size of the move that we have off the low. So that's a little bit higher than the ideal that we wanted to see in the low 4100s for the parentheses wave 1 of that circle wave 1, but it's also shorter than we wanted to see for all of a circle wave 1. So I think in this case, we'll just go ahead and allow that to be the higher, a slightly higher wave 1. Maybe we'll look for a little bit more muted fibs for this so it doesn't go quite so high. Maybe only get up to about 4190, and then probably get a deeper retrace again for the wave 2. And then when we zoom back out, I'm going to hide the fibs here again. So if we get that 618 retrace here, back down to 3950 again, and then we get maybe a little bit more muted fib extensions as the parentheses lowercase Roman numeral 3, then we can get our wave 1 not getting too much higher than this B wave top here in the 4600 region, so about 100 points higher than what would have been the more ideal proportions. So that does mean that maybe our fifth wave here of 3 might get a little bit more extension past the 5600 region if we're going to get more normal fib extensions based on the size that we have off the low. Now, one other thing that I do start to consider when things aren't quite lining up perfectly for size is, either you can say, all right, this is just a bigger version of the smaller wave 1 of wave 1 in our 5th wave, or maybe the structure is going to be a little bit different. Maybe instead of this filling out the rest of 5 waves up, maybe even though this looks like a strong 5 up here, maybe we're getting, this is an A wave and this is a B wave, and we're only going to get to about 4120s as an ABC up for this wave 1, and the structure for circle wave 1 might be a leading diagonal. So that's where I start to go, just when there's some of that discrepancy on size. But for right now, I think it's good to give this impulsive count, especially holding where we did after the Fed minutes and pushing to higher highs today, giving us the benefit of the doubt as the 1-2, the micro 1-2, the sub-micro 1-2 inside of our parentheses wave 1 of wave 1 in the larger 5th that we're trying to start. So at this point, we certainly want to see, ideal fib support hold the 3950s. A break of 3930 would start to get a little bit concerning based on the structure that we have off the low, although this could be 1, 2, 3, 4 and a 5th wave of microwave 1, but really, especially looking at the ES futures, this should be in the micro 3 of 3 already. So tonight we really, even ideally want to hold 3969 that we just hit and are starting this third of the micro third of 3 of our parentheses wave 1 now. Keith asks, when a wave is said to be extended, does it have to include a 1-2-1-2 embedded within it, or can a wave just go further than normal pinball, like 3 going to 2000 more? So you can have, you can have an extended move where the heart of the move stretches further than normal fibs would call for. Which I think is what happened here. We were expecting the 5th wave to be stretched out anyway, particularly because the primary degree wave 3 was so stretched out already, and we got that expanded flat. So even though we only got to the 0.50 of the parentheses wave 3, we got extension inside of the minute degree wave 3 of 3, and then we also, this easily counted as a top in August or September, and this could have been the start to our 4th wave drop, but we got over resistance in October and set up for more extension, and then that needed to fill out the rest of 1, 2, 3, 4, 5 waves up for that 5th wave. So sometimes extension is just heading to further than normal fibs inside the heart of a move. And sometimes when we talk about extension, it means we have enough that we can count all of the move complete, and then we get a move beyond that, which then makes us go back and recount. Instead of counting this as 3, 4, 5 of 3, this was just an extension of 3, and then this was the 5th of 3. All right, let's now go on to, first I want to look at the Dow, which I think, like the S&P, argues much more strongly that this is still just a minor degree wave 3 and wave 4 inside the intermediate degree wave 3 of primary wave 5. So we should be getting the 5th wave of the 3rd still, and then holding a 4th, and then getting the 5th wave of primary wave 5. So I like that a lot in the Dow. I think when we zoom in here, we also have really nice, good structure that kind of the Dow was leading the way yesterday and earlier today with a cleaner 5 waves up as wave 1, holding a higher relative retrace that wasn't as sharp and corrective as that in the S&P. Another 5 waves up as the micro wave 1, got a higher high for its B wave and an expanded running flat for the microwave 2, and then a strong start to get yet another higher high today inside the start of its microwave 3 of the third. And that fits very, very nicely as well with this being, where's my fifth? Oh, my fifth is hiding behind there. Again, similar to the S&P, larger than ideal for that wave 1, just based on what we would normally look for proportions for the circle wave 1 of 5, but not going to complain, and we can certainly work with the move up towards 33,584, which would be an ideal top for 5 waves up as that move, and then needing another corrective retrace. Then we look at the NYSE, that's NYA.X. Also, really clearly looks like a good ABC down for the 4th wave, held a 50% retrace, nice strong move off the low, deep retrace, but a new 5 waves up that looks pretty good. Actually, this could be 5 waves up in wave 2 here, and starting the 3rd of the 3rd. Already, I think this actually counts further along inside of wave 1 of the 5th. But good look there. And we've also looked at the RSP before, so heading towards the 20,000 level on the NYXE or NYSE, and then RSP as well. Finally, we got, this was not really enough to satisfy all of our 4th wave, but we were going to make do and say that it was close enough to our green box, and we're looking for 5 waves up as wave 1. Couldn't hold here as the 4th wave and get that higher high as the 5th, and then failed to hold support as any wave 2 for any kind of diagonal, dropping down to the lower low into our green box from when we were looking for the 4th wave from our yellow box, extending to the further edge of that top corner, and then down, hitting a 382 retrace and holding that so far. So relatively higher retrace than the S&P. And now we're looking for this to head towards our next target box at the 1382 extension here, although possible that we get more extension like this got all the way to the top end that we're looking for that 3rd. Not quite to the 1236, kind of halfway in between the 100% and the 1236. So certainly possible that this gets closer to halfway up in that target box. And so far, the structure we have off the low can fit very nicely with the same subwave count that we're looking at in the S&P. Move all that stuff over to the side. Now we'll look at the Nasdaq, which if the Nasdaq can hold, I'm perfectly fine. Still looking for the Nasdaq to make one more higher high in its primary wave 5, which in the Nasdaq is not the be-all end-all top, or should not be the be-all end-all top of its bullish move, because the Nasdaq, unlike the S&P, has a higher low here in 2008, where it starts its count in the September 2002 low after the tech burst. And we have 5 waves up as a cycle degree wave 1. And then the 2008 low held a higher low as the cycle degree wave 2. So to balance that equation, we should still get a cycle degree 4th and then a cycle degree 5th wave before the more major long-term top in the Nasdaq is done. Now, it is more possible because of the more scrunched move off the low to squeeze in all of 5 waves up for primary wave 5. So the alternate count that I have here in yellow is that this was all of primary wave 5 of cycle 3, and that we have started the A and we're due for the B wave bounce and then a C wave down in that cycle degree wave 4, which ideally is going to hold the 9,000 level. Should head up towards the 15 to 16,000s first as the larger primary degree B wave bounce, which should be an ABC move. And then if this is wave 1, then instead of getting an ABC move up for an A wave into the 14,000s of resistance, we should get 5 waves up for wave 1 of the parentheses wave 5. So 1 degree larger than what we're looking for on the S&P. Jonathan, I pronounce Manus as Manus, although my German roots it probably should be Manus. For some reason, yeah, we'll get to crude oil in just a minute, Kathy. All right. Now, quickly looking at a few sector charts. I know we don't normally do that. That's usually something that we reserve for stock waves, but a few things that I do want to show you guys. One is XLF. It is possible that this was all of the primary wave 5 in XLF. We do have a pretty good higher high over the primary wave 3. But again, we have that expanded, that B wave that made a higher high. And a lot of the individual charts don't quite look as far along and look much more like they're just the A wave and the B wave inside of a larger primary wave 5 as we counted here. Garrett and I were really not thrilled with most of the big financial names really since June and August, when it really looked like we were completing A, B, and C that we were looking for this larger parentheses A wave. Bank of America and then the forced XLF to get this extension that counts as an ending diagonal for both of those. That can either be a 5th wave as 1, 2, 3, 4, 5 waves up for an A wave, because A waves can be 5-wave moves or 3-wave moves, or just a 5th wave extension of this C. But at any rate, we do now have a nice ABC move down that is not quite to our ideal 30 region, 30 to 27, which would be a more reliable fib retrace zone. But the fact that this got the higher high and then still managed to fill a nice ABC down, proportionate with most of the other financials, the individual names, I think we'll let it slide that it's about halfway below the 236 towards the 382. And we're going to actually talk about this in more detail tomorrow in our webinar and some of the key names inside that sector. XLK, another sector. This is the, I think, consumer technology sector. Also holding, similar to RSP, holding that 382 retrace. So more nested start of the count, where you could maybe squeeze in all of primary wave 5, but the fact that this held a nice clear 3-wave retrace to only a 382 retrace and didn't get even as deep as some of the other, the Nasdaq itself and some things like XLY, I think are very encouraging for this to still be getting one more 5th wave up of its primary wave 5 of that cycle wave 3. Industrials, XLI, another similar to XLF, where it counts as a larger A wave and a B wave, but a very nice ABC consolidation off of the November high, finally completed. Maybe it needs one more low, but we did already get to a 100% extension and closer to a 1236 extension of that C wave, and similar to XLF, just below that 236 retrace. And the other one that I wanted to show you guys was SMH. Struggling a little bit because NVIDIA is getting forced to anomaly lower low for its version of this 4th wave on earnings. But another one where we have a really nice ABC structure down, and a lot of the individual names look really strong that we've been following in stock waves. Great proportions as far as the C wave hitting an exact 100% retrace so far. Strong reversal off of that, holding a higher low. And that's just under the 50% retrace for that intermediate degree wave 4. Again, it is possible to squeeze in all of the 5 waves up, but at the very least, we have a clean ABC move down, which should be getting a larger bounce at the very least as a larger degree B wave. All right, moving on, let's take a look at oil next. Oil chart, Garrett and I are counting very similar to most of the energy names. We've been looking at them as either, oil itself counts as a fifth wave. Most of the energy names count better as a C wave of a larger third off of the August low instead of the fifth wave of a third. In that structure that we see in most of those energy names, we've been keeping them in purple, or I've been keeping them purple to show the similarity between all of them as filling out as a diagonal. Even though most of them got very high in a third and are not getting much of a fourth wave that gets overlapped with the top of wave one, Garrett and I see that as an allowance for a diagonal, but not a requirement. So even though these are stretched out a lot to the upside, they still look mostly like a diagonal. There's a little bit of a discrepancy on oil here of where to place the actual bottom of the fourth wave, but we should still see an A, B, C move up for the fifth. And off of this low, we can at least count an A, B, and a 1-2 start to the C wave of that A. And you could get something similar as well off of this low, where this is just 5 waves up, or an ABC for the A wave, and still getting a C wave up to here. The only issue that I have with looking for this C of the fifth wave is that a lot of the energy names got even less of a fourth wave by comparison, and look much closer to completing a more muted count into the top here. So I'm going to go ahead and add that. So if we get a stretch, closer to 135 to 140 in this move, it certainly runs the risk of that being all of the fifth wave. Now looking at natural gas, autocomplete requires that I use that search function. Very similar, more easily counts as all of the A, B, C up for the fifth wave that I was looking for in this larger diagonal for a primary degree C wave up. But like oil and the other energy stocks, this could have been either an extension of the third and the fourth wave, or an expanded flat for the fourth wave, and then getting an ABC move up in line with most of those other things to this alt higher high, which could take it closer to 11 and more of a blow off top there. But the air is getting pretty thin in natural gas. I think the skew is not very favorable for much further extension to the upside. It could certainly do some crazy things, but the safe trade was back here when we were looking at for the whole move up for the fifth wave, or here when we were looking for a C wave up of the A wave, or here when we were looking for the C wave up, or even here when we were looking for the third of the C wave up, or even along the way here when we were counting this as a deep 1-2 and had excellent risk reward. But now the risk skew is very, very unfavorable. Moving on to bonds, let's go to the larger degree structure here. I'm going all the way back to the major low that I have back here in 1981 for the 30-year U.S. Treasury. I think that's a clear ABC move to the upside that I've counted as a cycle degree wave 1 in a larger diagonal. It is possible to count this as the cycle degree wave 3 and a smaller 4, or an expanded flat for 4, and then this is all of the fifth wave. But I think that this move into the 2016 high, when you zoom out and look at the larger proportions here, that this looks more like an extension of the intermediate 3 and a fourth and a fifth wave of primary wave C, just past the 1382 extension for the cycle wave 3. And then I'm counting this as an expanded flat for a larger cycle degree wave 4, and looking for this region to hold and us to get a clear start off the low for a possible larger ABC move up to new all-time highs again. If this was a major top, then it is possible to get one more low here as an initial A, B, and a C wave down, and then should get a corrective bounce into the 160s before treasuries really start to roll over and die. So I'm right now off of the low, looking at an initial structure which is kind of ambiguous, not clearly 5 waves up. This could be an A, B, and a C wave up. But we have another strong bullish move, which is either a 1-2 of a measured move, which looks like it projects further than a measured move, or the A and the B of a third in a possible leading diagonal. So that's what I'm following off the low. Really, 140 is key support as far as I'm concerned right now for anything immediately bullish in the long bond. In terms of that potential for one more low, no, here we go. This can be working on a 4th wave bounce inside an A, B, and a larger C wave down. And so this can be a 4th and get a 5th wave lower. So that not clearly out of the woods, but even if this is a larger A, B, and C wave down from a more significant top, this 4th wave can at least get a little bit higher here, and maybe that's only the A wave of a wider flat before it tries to drop to lower lows. Switching over to look at TLT, I noted on, I need to switch that. I noted on my other chart that TLT does not go all the way back to 1981. TLT starts its count at a low from 2004, which is pretty much smack dab in the middle of that larger primary degree C wave of the cycle wave 3 on the 30-year treasury. So I think TLT, looking at it by itself, is misleading, because you can look at this all-time low in 2004 and say, this sure looks like 5 waves up as a leading diagonal in a large degree, and this is getting a corrective retrace to a 618 fib, and call this thing a cycle wave 1 and a cycle wave 2 and be really long-term bullish on treasuries, and I think that that is very misleading. But even if there are lots of market participants that are completely ignoring that TLT is just a function of the 30-year treasury bond, the ZB futures, my chart is US, is labeled US, it can still get that same 4th wave and a 5th wave lower. For this to be a significant bottom, we have to base it on a Y wave, and even that could get another drop lower from the move that we have off of the low. If this is working on a 4th wave, I would probably say that this is just the A wave. Of a wider flat. All right, Colette asks, I've asked many times but never got an answer. Are you predicting negative rates in 30-year bonds? Because what your chart? I mean, I'm not making any rate predictions. I'm just saying the way that I'm counting this, if we're going to hold this region as a cycle degree wave 4, then I'm looking for an ABC move up to at least a higher high towards the next fib, which would be close to 215. That might have real interest rates or, theoretical interest rates heading negative. I'm not sure if we actually see that. So far, we haven't confirmed a bottom or anything clearly bullish off of this recent low. And even in, whether this is an A, B, and a C wave, or a WXY, and this is A, B, C down, we can still certainly get a lower low, just like we were looking at on TLT. And maybe only get a corrective bounce after that, and then continue to head lower. Looking at the dollar next, I have a potential larger degree top in place as an extension of this primary degree 5th wave of a cycle degree C wave in a much larger structure. This can be an A, B, and then 5 waves up as a stretched out C wave that is hitting a 50% retrace of this larger ABC to the downside. So I don't know if this is a super cycle degree A wave and this is a super cycle degree B wave, but I see only 3 waves up here and due for at least a move back down towards the 80s for support, at least as far as the next move. And pretty clear 5 waves up complete as a proportionate C wave there to 1382 extension and a strong reversal from that. So maybe this needs to bounce more in the short term, but I would like to see that 105 level hold as a pretty major top. All right, moving on to gold. Gold, Garrett and I are counting as a larger diagonal off of the March 2021 low as the primary degree wave 4, wave 1, deep wave 2, but held a higher low, an ABC up for wave 3, a deep retracing again for the 4 just under the 618, and trying to start that ABC up towards the 2200 region to complete 1, 2, 3, 4, 5 waves up inside this larger fifth. At the smaller degree, we know that the A wave can often break down into its own ABC move, and that A wave can easily break down into an ABC move. When we zoom in a little bit more, it's not clear if this is all of our B wave or if this was a slight extension of the A wave here, and that this is a new B wave, and we head a little bit lower as the C of the B wave, more towards the 1820s, which would probably be the more normal expectation, but I don't think you can rule out, you certainly can't rule out, or I wouldn't have put it on my chart at all, this more aggressively bullish setup for all of the A wave, an ABC expanded flat for all of the B wave, and I think any move over 1870 probably makes a beeline towards 1910 to 1930 next. Actually, hang on a second. If that was, if that was all of the A wave and this was all of the B wave, then the fibs take us to 1920 and maybe all the way up towards 1940 for normal fibs for that parentheses. There we go. C wave. And silver, much less clear. Certainly at the larger degree, it can count as 5 waves down now. If this is not an alt low for this larger B wave off of the 2020 lows or 2021 lows, it does not look anywhere near the same and does not have anywhere near the same strength that the gold chart does. So off of the May low, I'm looking for a small diagonal to try and fill out. We have an ABC up that can count as wave 1. We have an A wave filling out what might end up being a triangle here for the B wave. So this is A, B, C, D, and an E wave of the triangle, and then heading up for the C of the third, and then needing a fourth and a fifth from there to get the first 5 waves up. And that takes us into this 2360 to 24 resistance region, which we should see a consolidation from anyway. And then looking at GDX, GDX did not make a lower low here in May that GDXJ did. So it leaves this awkward ABC up, or 5 waves up, even a more awkward wave 1 of the parentheses C wave, and a very, very deep retrace for the wave 2 as still a possible count. GDX, so again, similar to what we were looking at in silver, a possible micro structure off the low, trying to fill out 5 waves up as a leading diagonal. At the larger degree in GDX, I'm looking for a parentheses C wave of the primary wave 3 in a larger diagonal. If this is still wave 1 and wave 2, then we should get ABC up for the third, and then a fourth and a fifth. If this was an alt low for the B wave, even if it doesn't make a lower low, then we can just restart wave 1, 2, 3, 4, 5. When we zoom over to GDXJ, we can see that GDXJ did make that lower low compared to this low. So it is starting its parentheses C wave from here. And it does look a little bit more impulsive off the low so far, as this wave 1 of parentheses wave C wave. Need to hold this 39.20 level and head up closer to the 42 region for the third, then get a fourth and a fifth wave up, and then hold a corrective retrace as wave 2. Joanna asks about the Russell. I don't know if I have IWM marked up current. The Russell, I am much more concerned about this having topped in all of the primary wave 5. It got a lot deeper and looks a lot worse for wear. And any count off of, what counts best as its third wave into the March 2021 high, and then a very deep retrace now, much more likely at the larger degree as that 4. And so if it is going to make a higher high, I think it is limited to getting an A, B, and C wave up. Should look like this. I'll make that blue to emphasize that it would be part of a diagonal. So maybe it takes most of the year to get more of that A wave up, and then it holds a relatively higher high in the B wave when no, probably is going to try and do this faster. This should be the A wave when most things get their wave 1 of 5, and then the C wave when most things get the third, and then it does not get a fourth and a fifth beyond that, and then that is just the top for the Russell. And so it starts to diverge, similar to what it did here, where it struck its top for the third, and what should have been the third of the parentheses wave 3 in March, and started consolidating early. And then its big failure was when it couldn't hold on to a more impulsive count here back in November to head more immediately higher inside the fifth of the parentheses wave 3 of an impulse, and broke down into a larger corrective pattern. So it might end up doing that again. So it might run really, really hard in this C of 3 when most other things are getting their third of the fifth, and then it puts in a top early and then starts to diverge from everything else. We are running a few minutes ahead of schedule. Is there anything else I missed covering, or any other questions that you guys have, or we can just go ahead and end early? Nothing? Greg, Bitcoin, well, Ryan covers Bitcoin very, very in depth, but I can see if my chart is more up to date. Do not have confirmation of a bottom to this fourth wave. I thought I had a cleaner version of this. Nope, definitely not that one. Nope, not that one. Nope, not that one. All right, we'll have to work on this. All right, so zooming out even more, Bitcoin, its low that I have is back here in 2010. We have a large primary degree wave 1 and wave 2 into the 2011 low. That's the red fib extensions are for that primary degree wave 3. So when we zoom back in to the daily chart, actually we'll go to the 2-day chart. So this might have been, an extension of the intermediate degree. I think that's what Garrett shifted to. So instead of this being 1, 2, 3, 4, and then a very extended fifth of the fifth of primary wave 3, I think Garrett just shifted and moved this 3 over to here. And so this is parentheses 4, and then this is 1 degree larger as the 1, 2, 3, 4, and 5 of parentheses wave 5, but it gets us to the same place at the end. Really looking for one more high as 5 waves up, as the fifth of 5 waves up off of the 2018 low. So we have a deep retrace for the wave 2. We have a wider flat that filled out for the wave 4, but still and in normal fib support above a 382 still, although it has not bottomed and could still make a lower low. Although if it does drop to a lower low, I would probably recount this as a WX, and then this is A, B, C for a Y wave instead of the fifth wave down in orange, because that would be a little bit too long for a fifth wave. So looking for a 5 wave move up to a new high, and ideally that stretches all the way up towards the 1618 extension, because we've already gotten well past the 1382 of the red fib extension. And especially if we move our parentheses wave 3 here, that's the parentheses wave 3 past the 12386 and almost all the way up to the 1382 in red fibs. So we really should get at least the 1618 extension, which takes Bitcoin all the way up closer to the 150,000 mark before we would get a much larger degree primary wave 4, which would probably come all the way back down towards the 7,500 to 5,000 region. GBTC, we would follow this for the most part. That's something we'll cover in stock waves tomorrow, then, if you'd like. The thing that we look for most things to confirm a bottom is it needs to get past that resistance where we're worried about another drop. So that's really 34,000 region, and it needs to be 5 waves up and 3 waves back. Normal proportions, if we are starting a fifth wave, we would want those to be something like this. So 5 waves up towards 46,000, and then holding a corrective retrace back towards 34,000 would be the most ideal. All right. My favorite path of SPX would probably, we talked about that at the beginning. That's the structure that I'm looking for to fill out off of the current low. Would be to get this purple path up to 4,200 as our wave 1 of 1. That would be step 1. All right. Have a great evening, everybody. I will see you next time.